All right, if there's any doubt, the S&P 500 is still being led by the energy sector. Now, if we go back and look over the past month, you can definitely see this rally that's occurred. We've had a few things that have spurred the uptrend, including some optimism that inflation has peaked. But if you go back and look, you see over the past month, financials have done very well right here. Industrials, materials, basically everything has shown quite a bit of increase relative to where they were before. Go back over the past 5 days. We also see a very strong week. Now, I want to focus on energy, though. And let's go back and look over the past 3 months. You see the S&P large cap energy sector is up nearly 20%. Go back over the past 6 months. Clearly the biggest leader right here. Year to date, same thing. The sector is up 67.8% year to date. Now, no matter what you think about the energy sector, fossil fuels, this is the leading sector right now, folks. And, when I have advisory clients who ask if they can avoid fossil fuels, you really don't want to do that because, first of all, you see if you try to pick and choose sectors, you are going to miss out on opportunities. And second, like you're seeing right here, that's been the case with energy. Some other sector, probably not utilities, probably not industrials, but, other sectors do rally into leadership. We know tech, of course, healthcare. But the bigger point is that even if you object to the environmental impacts of energy, fossil fuel, first of all, the energy sector does include solar and alternative energy. And when it comes to the big fossil fuel companies, yeah, the activist investors are holding their feet to the fire to match some ESG considerations, environmental, social, and governance. So yeah, we are seeing that happening. These companies are having to make changes, develop cleaner energy alternatives, cleaner alternatives to drilling and so forth. So it really is happening, and investors are forcing some of those changes. All right, so flipping over here, I just want to show you a few examples of standout companies from the energy sector. This is Schlumberger, obviously very large company, 77 billion market cap. And this is a vertically integrated company, provides a lot of different services to the oil and gas industry. You see that broke out of a base, rallying to multi-year highs over here. And you do have some very good revenue acceleration here, going from 5 to 11 to 13 to 14 to 20 to 28% growth in recent quarters. Very strong earnings growth as well. We can flip over to Halliburton. And, again, whatever you think of the oil and gas industry, I know that there's oftentimes some political associations with this stock. You know what? It is what it is, because the industry itself does evolve. Individuals that were associated are not associated with the company forever. And frankly, folks, we do need fossil fuels right now. And over time, these companies will be evolving if and when the usages for fossil fuels do decline. I'll give you a great example. Eastman Kodak, my dad worked there for 31 years. The company never did adapt to the changes in the digital industry. Boom, what happened to Eastman Kodak? It is a shadow of its former self. And as the energy environment changes over time, won't happen overnight. We're not all going to flip to solar overnight or wind power overnight. But as that does happen, you will see these companies adapt. So in any event, Halliburton forming a nice cup pattern. Now, what's interesting about this is you see it undercut its prior structure low over here, rallied to a new high over here in June, pulled back, really along with the broader market, undercut that prior low. What that does is that sets the stage for a fresh run up as institutional investors come in, purchase the stock at a lower valuation. So you can see that. Here's one I don't really know about. It's a new company. It's a mid cap market, really kind of on the cusp of small and mid. Got a market capitalization of 3.53 billion. ProFrac Holdings. All of these are in Texas. Not that the whole industry is there, but a whole lot of it really is. And you can see here, went public back in May, kind of chopped around. That's not unusual for a new company to rally after an IPO, pull back as some of the initial buyers take some profits. You also have the lockup period where employees and other early investors are allowed to sell shares. That's usually after about 90 days or so. You sometimes see a pullback as that occurs. You also had right around here, though, the broader market pullback this summer. So that undercut some of its earlier lows over there. But now the stock is rallying to new highs, one to watch. I really like this revenue growth acceleration, right? Going from 9%, 27, 42, 83, 131, 237, 256, right? Every quarter, it just keeps getting higher year over year. And some terrific earnings growth here, good expectations for the earnings over the next couple of years. Take a look at another one here, Tidewater. As the name suggests, this is offshore drilling support. And I'm not really an expert on this particular sector. I just want to show you kind of why it pays to understand what is in leadership at any given time in the market rather than trying to pick or choose. Okay, so you do see that this one broke out of a consolidation. You have that same pattern we've seen recently, right? With accelerating revenue growth over here. So there's a lot of opportunity right now in the energy sector. That has just continued to be the case for 2022. At some point, will leadership rotate into some other sector? Absolutely, it will. But we're not seeing that yet. So really just wanted to show you how important it is to understand what is leading the market at any given time, even when you are, especially when you are, a broad market investor. All right, thanks for watching. Hope you found that helpful today.